Here now, Gordon Chang, author of The Coming Collapse of China. Gordon, China now pushing back today, saying renewed pressure will not work. Are they ready for a long trade war? Because, again, this $200 billion that was talked about yesterday, this was not new. It didn't come out of the blue. The White House, quite frankly, has telegraphed that very quickly, that it would be $50 billion initially and then maybe another $200 billion. What do you make of it?
Well, certainly China is not prepared for a long-term struggle with the United States. And the Chinese know that. The only way they can win this trade war is if they bluff President Trump down. And by the way, it's not really a trade war now. It's a tech war, because we're talking about tariffs that are imposed under Section 301 of the Trade Act of 1974 to remedy China's theft of U.S. intellectual property. That theft runs in the hundreds of billions of dollars a year. And if you don't like the tariffs, China, then just stop stealing our stuff.
What are you looking for in terms of how American companies, manufacturers deal with the increased tariffs? Because I've listened to or gone back and listened to a lot of conference calls from these retailers, and maybe the impact is not as grave as some people might think, because a lot of these companies, major discount retailers, they have pretty diverse manufacturing bases. It's not like that every product that, say, a discounter sells is going to go up 25% automatically.
Clearly not. If you were to go to a Walmart 10, 12 years ago, you would see that of their house brands and garments, 90% or more were made in China. You do the same thing today. Look at George, their house brand. It's about the reverse. It's about 90% elsewhere. And so supply chains can move. The only company that really can't move its supply chain quickly is Apple, because of Foxconn. But Foxconn will, if there are the pressures, Foxconn will move elsewhere, as they moved into China. They started in Taiwan. They moved to China. They can move out of China. But Apple does have a real problem. And the other thing that I'd be worried about would be the pharmaceuticals, because they've located a lot of their manufacturing to China.
Gordon, I look at this situation, and markets don't seem to care that much. A little sell-off past couple of days, but overall, we're right near all-time highs in U.S. stock markets. What's the real message here? Because I'm hearing about this, and it just seems like, for lack of a better way to put it, the U.S., President Trump have hand here. They really have a lot more leverage. It looks like what's going on here with these tariffs is going to hurt China a lot more than it's hurting the U.S., both in terms of manufacturers and consumers. What are we missing here? You mentioned the intellectual property and things like that, but it seems like China's been getting away with that for a long time. Is there really recourse against that? What leverage does China really have here?
Well, the leverage that China has, because first of all, they don't have the leverage on the tariffs. I mean, last year we imported $505 billion from China. We only exported 130 or so, which means that they're going to run out of bullets. The only leverage they really have is to hold U.S. companies like
Apple
hostage. And that is really what they're going to do. But, a lot of Chinese officials really think that's a bad idea for China, because really what it means is that the European companies, the Japanese, the South Koreans, and, everybody else, they're not going to want to put their companies into China in the future. And I think you're going to see foreign direct investment into China really decline precipitously, largely because, people don't want to be subject to intimidation.
I do want to point this out, though, that there's a lot that goes on within China in terms of misinformation campaigns out of the Chinese government about American companies. You've seen this time and again to try and drive business away from companies that are already doing business there. There's a lot that this centrally controlled government does, not just stealing intellectual property, but really trying to hammer American businesses when we get in a fight with China.
Yeah, and Apple has actually been a victim of that in March 2013, and very recently they're now starting to say, look, Apple, if you want to stay in China, you're going to have to give more to us, which is really extortion. But they've really focused in on Tim Cook's company.
So, Gordon, question for you. So we don't look at just trade in a vacuum. It seems as though that China, they're also a player in how we deal with the Korean Peninsula, and they are now starting to tinker with that because of this looming trade war. What's the implications of that in the long term for the market, and what's the implications militarily? Yeah,
if you go look at President Trump's tweet of last Friday, even the tweet of Wednesday, he puts the two together. He says our policies on trade are actually affecting China's attitude towards us on North Korea. Actually, I don't believe it. I don't think President Trump should blame his policies. And the reason is China has been villain for decades on North Korea. They've been a villain for decades on trade. So, basically they might have, what President Trump does might have a marginal effect on Beijing's reaction. But long term, you look at what the Chinese are doing on both issues. I don't think that President Trump's tariffs are having much of an effect on their.
And how about the military spending?
Well, China's
Navy spending.
Oh, there's a tremendous amount there, and the question is, why are they doing this? They want to do it because they want to take territory from their neighbors. They want to close off the global commons. This puts them into opposition with everybody else, including the United States. This is a very bad story for Beijing long term.
When we started this conversation about what's going on with trade, tariffs, and the White House, even Steve Forbes was on this show saying we should have and need to lock arms with all of our allies and take on China as a united front from Japan to Canada and Mexico. And that was the disturbing thing about the steel and aluminum tariffs to begin with. However, we should point out, deal with Mexico, it's a handshake deal. Negotiations with Canada, that's why we are watching this renegotiation of NAFTA so closely. And there was just a report out in the Globe and Mail newspaper in Canada with this headline, Canada government officials said to doubt NAFTA deal Friday. So it is a deadline. It is an arbitrary deadline, according to some, set by the White House. But that's why, not just in terms of the United States economy and our trade with these allies, that's why it's so important to make sure that we get everybody on our side and we can take on China.
That's absolutely critical, Dagan, and you're 100% right on that. And that's why the handshake with Europe at the end of July, that was a good thing, because really what happened there was, for instance, you take soybeans. Everyone talks about soybeans. The Europeans agreed to buy more soybeans, which is a message to China, is like, don't mess with American soybean farmers, because we won't sell to you, China, but we will sell to the Europeans.
Gordon, it's great to see you.
Thanks, Dagan.
Gordon Chang.